J.P. Morgan, revenue rose 9% to $47.12 billion. The provision for credit losses was $3.4 billion, while J.P. Morgan managed to dodge losses from First Brands. It did lend to Tricolor, causing $170 million in charge-offs in the quarter. Net interest income of $24.1 billion, up 2%. J.P. Morgan Chase's efficiency ratio for Q3 2025 was 52%, and the tangible book value was $105. Also reported a 20% return on tangible common equity, ROTCE, for the third quarter of 2025. Moving on to Bank of America, revenue was $28.1 billion, up 11%. Net interest income $15.2 billion was up 9%. Total provision losses was $1.3 billion, down 13%. Bank of America is among the group of lenders to bankrupt auto parts maker First Brands, but the loans are backed by strong collateral. Bank of America's recent ROTCE, return on tangible common equity, was 15.4%. Its efficiency ratio for the third quarter of 2025 was 61.7%, which is an improvement from the previous year. The tangible book value per share was $27.80. Next, Citigroup. Its revenue was $22.9 billion, up 9%. Net interest income was $13.3 billion, up 12%. Citi continues to advance its multi-year strategy to streamline operations and focus on its core businesses. Citigroup's latest return on tangible common equity, ROTCE, ratio was 9.1% as of September 2025, which is steady but lower than its major competitors. This metric represents annualized net income as a percentage of average tangible common equity. Citigroup's efficiency ratio for the third quarter of 2025 was 64.7%. A lower ratio indicates that the company is operating more efficiently, with less money spent on overhead relative to its revenue. Citigroup's tangible book value per share was $95.72 at the end of the third quarter of 2025. This represents a 7% increase compared to the prior year's third quarter, driven by net income, share repurchases, and positive movements in accumulated other comprehensive income, partially offset by dividends. Since announcing plans in April 2021 to exit consumer banking in 14 markets across Asia and EMEA, the company has completed exits in 9 countries. Citigroup sold a 25% stake in Banamex to a company wholly owned by Mexican billionaire Fernando Chico Pardo, with the transaction expected to close in the second half of 2026. Lastly, Wells Fargo reported revenue was $21.4 billion, up 6%. Net interest income was $11.9 billion, up 2.2%. The U.S. Federal Reserve lifted the lender's 7-year, $1.95 trillion asset cap in June, drawing a line under its fake account scandal. The provision losses was $681 million, down 8%. The bank was not a big player in the subprime auto market, and the performance in its auto portfolio continues to be good. Wells Fargo's return on tangible common equity, ROTCE, ratio for the third quarter of 2025 was 15.2%. The company has set a new medium-term target of 17% to 18% for this metric, up from its previous 15% goal, and expects to achieve it through efficiency gains and capital management. Its efficiency ratio for the third quarter of 2025 was 65%, an increase from the previous quarter. This indicates that the bank spent 65 cents for every dollar of revenue generated during that period. While the ratio is improving from previous years, it is still higher than the industry average, and the company continues to focus on expense reduction to improve efficiency. Wells Fargo's tangible book value per share was $44.18 as of the third quarter of 2025, showing a year-over-year growth of 6%. This metric represents the company's book value minus intangible assets, and it is considered a more accurate measure of a company's net worth in a liquidation scenario.